Just from my perspective, it seems like such a straightforward bet. And you mentioned price forecasts. To be honest, I am completely clueless about tomorrow's trajectory. Alternatively, by year's end, I will have no idea where it is. Though I'm estimating 100,000, I'm sure. It will be 200,000 at some point, and then 1 million, and then 2 million, and 8 million, and then the fear sets in. I'm bringing it up because it's the inevitable next step in a network's development. Besides, I mean, you're going to purchase it in the end. Most people have no idea. This will sell out to everyone in the end. It seems like nobody noticed, or at least not many people. If you want to avoid paying a lot more later, you might as well get it now. Guess who's keeping tabs on us now? Rob Kiyosaki is the author of the best-selling book Rich Dad, Poor Dad. Also, we'd like to use this chance to express our gratitude to everyone who has put their faith in us. Not only that, but it's free, and we read all of the comments. You may get all the fresh information for free if you subscribe now. It's better to be ahead of the curve than to merely follow it. Get a head start by subscribing to Bitcoinzilla now. Lastly, Larry Lepard explains why he believes a single Bitcoin coin will be worth $10 million in today's video. After discussing his current ideas on the cryptocurrency and its similarities to the early internet, Bitcoin is a mysterious beast, and no one can say for sure how its price will change from one day to the next, let alone from 1 month to the next. Having seen it for quite some time, I can tell you, this is it's a priori. To be honest, I don't sell, I merely hodl and use dollar cost average. So yeah, the ETFs are a huge step in the right direction. They are, in fact. They loan out a lot of money for the asset, and even now, I mean, the asset value was in the low to mid 60s. Well, it's still up, really, for the year. I'm not sure, maybe 40%. You know, it's not like a major catastrophe or anything. Just think back a year, it was 16 when this happened and 30 when you were pleased. So it's still doing its job and will keep doing its job. Therefore, I don't think the short-term fluctuations are all that important. Honestly, I have no idea what's causing the pricing to be where it is right now. Personally, I'm not very into that kind of content. I mean, it's definitely possible considering the volume of Gox money. A large number of hedge funds have also been short this market, in my opinion. Along with the fact that I believe they will have their faces severed. Some people have told me that the halving happened not long ago, maybe a couple of months ago, and that the miners' reward was cut in half. Since some of them had Bitcoin on their books, and since some of them aren't making much money or are experiencing cash flow problems, I think that the marginal ones are probably forced to sell the coins they have. Stay the lights on, and they're simply waiting for the price to go up, which it hasn't done yet. In addition, we saw a small decrease in the hash rate. My guess is that it should have dropped even further. Also, I understand I'm only speculating that certain miners are likely running at a loss at the moment. That still haven't given up. They've departed from the turn. Plus, they keep the equipment running because, hey, it will definitely come back up. Up until they finally gave in and said, oh, screw it, we were at a standstill. Well, I'm just going to switch off these devices and call it a day. Hash drops a little further, then yeah, it's like you can just pop up out of nowhere after that. Basically, everyone is aware of how this works. That this asset can actually and rapidly change direction is what makes it so weird. That is why I am predicting that the hedge funds that have bet against this will soon undergo a profound spiritual awakening. They just don't get it. They have no idea that this nonsense can increase by 50, 100, or 100. And 50% in the span of a few months. Trust me when I say that those shorts will be covered in no time at all. I mean, I am aware that Sam mentioned how much I like him, but I'm still not sure. Within a year, he claims, you know, 1 million. I really hope he's correct. I don't believe he is, but, you know, I can't really see us not reaching 100,000 by the end of 2024. I also believe this cycle will lead us to 200,000 or 300,000 later on. You know, and maybe we're a little overbought at that moment. We recover a bit, but I'm thinking about it in such a long-term, cumulative way that the monthly fluctuations don't really matter. For example, when I saw the 6, I thought maybe I should sell something else I have. Maybe I should just sell it and get this one immediately. I thought to myself, if it reaches 50, I will most certainly do it. This other asset is going up for sale. So, I mean, come on. At these prices, it's ridiculously cheap. Total market capitalization for cryptocurrencies increased by about 2% in the past day, reaching $2.32 trillion on July 1st, indicating an upward in the sector. The increase in market capitalization is due to the fact that both Bitcoin and Ethereum have seen rises of about 2.5% and 2.2%, respectively. A divergence in the macro decreasing sell-side pressure and a rising market structure are major drivers driving the crypto market upward today. After the Federal Open Market Committee meeting on June 12th, the cryptocurrency market started to gather momentum according to a deeper look at its recent performance. By maintaining the Fed funds target range at 5.25-5.5%, the FOMC meeting essentially fulfilled investors' expectations. The Consumer Price Index's reading of a decline in U.S. inflation was less robust than anticipated. The actual GDP print last week was 1.4%, which was somewhat better than predicted and contributed to the improved market confidence. Furthermore, the U.S. labor market's recent downturn and the personal consumption expenditures reports released on June 28th both seem to have raised the possibility of at least 2 interest rate reduction by the central bank this year, most likely in September and December, at the FOMC meetings. On September 18th and December 18th, the most recent statistics from CME Group's FedWatch tool indicated a 58.2% chance of rate decreases and a 43.3% possibility, respectively. Increased upside volatility with frequent corrections and consolidations along the way can be widely characterized by trading activity. When examining the crypto bull market over multiple time frames, when there is a mismatch between supply and demand, as happens in the market from time to time, it triggers price corrections on a local and global scale. Monitoring the influx and outflow of stablecoins from exchanges is one approach to demand and supply analysis. According to CryptoQuint's data, the average size of the top 10 U.S. transactions that leave exchanges is the entire amount. The graphic shows a decline in outflows following a significant increase, suggesting that the pressure on exchanges from large-scale sellers is easing when looking at the trend from 2023 to the present. The fact that money isn't leaving the market as quickly indicates that investors are content to keep their assets in the market. I don't believe anyone has missed the mark, really. I believe we're only scratching the surface, and it will double tenfold and then tenfold again when looking at an investment opportunity 15 to 20 years from now. You certainly don't want to lose out on something that could increase in value by a factor of 100 or even 1,000. So in the first place, I don't think that sum will be significant. Being a full-fledged coitus will be a major scandal in a few years. Therefore, I don't suppose you were able to miss the quote. In my opinion, it is vital that you comprehend the current situation and how this can maintain its value appreciation. You mentioned Microsoft as an example, and I recalled a tale from my Madeira performance with Sailor Lynn and Preston in which I mentioned how I acquired Microsoft shares for what would be considered 6 cents today and how their value has since skyrocketed to hundreds of dollars. It was 4,300 times your money or something like that. It is really insane. I purchased it in 1986 when they first went public, or 1987 at the latest. A few years later, I sold it to fund the purchase of a Minium, as I had already made a profit on it. I'd done well. Enough to warrant investment status up to 3x, but I needed the cash to really buy a house. That decision has left me feeling, well, I'm not exactly furious. My frustration stems from the fact that I should have kept 1/3 and sold the other 2/3. Are you understanding me? And locate the remaining third in a different location. I would have been able to locate it. Some things I could have done differently would have allowed me to get the additional third. But anyway, and so I believe the main problem is that people don't realize how valuable it is to compound something at a rate of 20 to 30% per year for several years. This is the stuff that makes people rich. This is a one-of-a-kind asset, though. Due to seller fatigue, this may indicate that investors are now in a more optimistic mood. Meanwhile, at